Alright, so we are going to look at balancing an account, and we have already learned how to post transactions into the various accounts. So let's assume that this is an account, a cash account, okay, and let me assume that these transactions have already been recorded. So there is capital here of, let's say, 10,000. There is sales of 6,000. There is rent of 1,500, and let's say there is furniture of 3,500. Now let's assume that this is an account. We want to balance an account. Now what we do is that to balance an account means that you want to make the two sides equal. You want to make the two sides equal. So what we do is that we will add the total of the debit side, and then we add the total of the credit side. So if you add the debit side, you are going to have 16,000 as the total, and the credit side amounts to 5,000 cedis. So it tells us that the debit side is more than the credit side. And so what we do is that we leave a space, and then we rule off for total, and then we put the bigger amount on both sides, because we want to make the two sides equal. That is the meaning of balancing. To balance means to make it equal. Now, once that we have made the two sides equal, we know that this side is 5,000. If we find the difference between these two figures, we are getting 11,000. So we need 11,000 more to make this equal to the debit side. So we put it there. Now we call it balance carried down, balance C/D, balance carried down. So when you want to balance an account, there are 6 steps. 1, ascertain the total of the debit entries. 2, ascertain the total of the credit entries. Then 3, you find the difference between the debit total and the credit total. That is what I just did. And then 4, you put the difference on the side with a smaller amount. Like I did, the credit side was with a smaller amount. So you put the difference on the side with a smaller amount, and you call it balance carried down. And then 5, you add them up again to be sure whether they are truly equal. So when you add it up, you see that this is 16,000 and that is 16,000. And the last point is that you bring down the balance carried down to the opposite side after the total, and then you call it balance brought down, but it should be the same amount. So these are the 6 easy steps you need to follow in balancing of an account. Alright, so this is a typical way. Then we also have something called a balance on an account. Now let me explain what we mean by balance on an account. Now a balance is simply the difference between the debit and credit side. Okay, so when the debit side is more than the credit side, for example, this 11,000 here is the balance on the account, and then we have balance carried down and we have balance brought down. The balance carried down means that it is on the side with the shortage, and then we bring the brought down to the opposite side, just to say that we are beginning the following period with the balance carried down, starting the following year. So that is basically the difference between balance carried down and then balance brought down. After balancing an account, what we do next is to extract a trial balance. So let us look at the concept of the trial balance. The concept of the trial balance. It is said that in accounting, any statement that ends or begins with balance is supposed to balance. So we have a trial balance and we have the balance sheet also. So a trial balance. Now a trial balance is a list of debit and credit ledger account balances extracted from the books at the end of the accounting period. So a list of debit and credit ledger account balances extracted from the books of accounts or from the ledgers at the end of a period. So it's a list. Okay, it's just a list of debit and credit ledger account balances. So what we are going to do is that after we have balance of the account, we pick the balances on the account and then we list them into a trial balance. This is the format of the trial balance. So this is a debit column and a credit column, and then particulars. Okay, so we put our currency. So what we do is that for this cash account, for example, we'll pick the balance brought down. It's on the debit side, and so we say that it has a debit balance, and we call it cash. So this is what we are going to do in our next video. We are going to balance of the accounts we prepared in our previous video, and then we are going to use those balances to extract a trial balance. Now, an account can either have a debit balance or a credit balance. When we say an account has a debit balance, it means that the balances on the debit side is more than the figures on the credit side. If the total of the debit side of an account is more than the total of the credit side, then we say that the account has a debit balance. On the other hand, if the total of the credit is more, it exceeds that of the debit, then we say the account has a credit balance. And so there are some accounts that we should have them we should know at our fingertips the balances that they have. For example, capital account always has a credit balance, purchases has a debit balance, cash account has a debit balance. There are some of these accounts, when we continue to prepare them on daily basis, we will come to the realization that almost all the time the debit sides are exceeding the credit. Then we say these accounts have a debit balance. And there are some accounts that the credit side will always exceed the debit, and it has a credit balance. So we should learn them very well. Now, I want to do a final list for you on something. Now, there are some accounts that when you are preparing, like capital accounts, and then drawings account. These two accounts are opposites in nature. Purchases account. So these two are opposites. And then we have purchases account, and then we have sales account, which are also opposites in nature. Okay, so return inwards is called sales returns, and then return outwards is also called purchases returns. Now these two are opposite in nature. These two are opposite to each other, and these are also opposite to each other. Capital account is always having a credit balance, whilst drawings is always having a debit balance. Sales is having a debit balance, while purchases is having a debit balance, while sales is having a credit balance. Return inwards is having a debit balance, whilst return outwards is having a credit balance. There are some other accounts that you study as you move on, and you realize that they are opposite in nature, and that we always debit this and we always credit that because of their balances. Okay, now let me also explain something to you. Now, when I was preparing the accounts within the previous video, when I got to capital, I told you that we are going to credit capital, and I told you I will explain why we are crediting capital. Now, what class of account is capital account? What class of account is capital account? We always credit capital, but why? What class of account? What rule is guiding it? Now, it will interest you to know, maybe you have never heard it before, that capital account is a personal account. Drawings account is also a personal account. So these two accounts are personal accounts. And you ask me, why are they personal accounts? Let me explain to you. These are the accounts of the owner. Let me assume that we have something we call owner's account. Okay, let's assume we have the owner's account. Now, the owner, I told you, is a special type of creditor to the business, because the business entity concept teaches us that the business is a separate person from the owner, and it means that the owner is seen as an outsider. Whatever resources that he has invested into the business, we see that the business is indebted to the owner. So the owner is a special type of creditor, and the owner is a person. So the owner's account is a personal account. Okay, you agree with me that the owner's account will be a personal account. Now, when the owner is giving resources to the business or providing capital, cash in the form of capital, because the owner is a person and it's a personal account, we apply the personal account rule, which says that debit the receiver and credit the giver. And so now we ask ourselves, is the owner giving to the business or receiving? Once he's providing capital, he is giving. And we say credit the giver. So we are going to credit the owner anytime he's bringing in capital. So this portion of the credit side will always be credited whenever capital is coming in. And when the owner is making drawings, you will know that drawing is also another side, because now the owner is rather taking from the business and we debit the receiver. The owner is receiving. So drawings will always be debited to the owner's account. And then capital coming in will be credited because the owner is giving. Now what we do in accounting is that we do not open any account that we call the owner's account. But what we have done is that we have divided the owner's account into two. And so drawings column is separated as drawings account. And then the capital side is also separated as capital account. And so whenever the owner is bringing in capital, we credit the capital account because the owner is giving. And when the owner is also taking for private use, we debit drawings because the owner is taking. So basically what we say is that drawings account is the debit side of the owner's account, and capital account is the credit side of the owner's account. And so what we are trying to say is that drawings and capital are both personal accounts because they reflect the personal account of the owner. All right, thank you so much. Okay, so we are going to balance up these accounts and then extract the trial balance. And pardon me for the very small handwriting, but I'm sure you will see it. And we are going to balance up this account like I explained earlier. Balancing of an account is making the two sides equal. Okay, and then where there is a shortage, you put the difference there and call it a balance of down. Okay, so what we are going to do is that we go account by account and try to make the two sides equal. Looking at the capital account, you will see that there is only one side that is 10,000. So to make it equal, we have to put the same 10,000 here. And we always choose the last day of the month. We are operating in June. So the last day of June is June 30th. And then we call it balance carry down or balance CD. And then we close it off. I'm closing it off straight away because it's just one entry. Then when we close it off, this balance carry down will begin in July as a balance brought down. So we come down to the opposite side July 1st and we call it a balance brought down or balance BD, the same 10,000. So that is what we have done. Then we come to the cash account. When we come to cash account, we will try to make the two sides equal. And we could see that the debit side is more than the credit side. So let me leave a space for the balance carried down. So the total of the debit side is 10,800. Of course, the credit should also be the same 10,800. So we have to find the difference and then put the difference. We want to make the two sides equal. So we put the bigger side here and then we just find the difference. And the difference, putting these two together, we have 7,180. So taking 7,180 from 10,800, what do we have? Okay, so the difference is 3,620. And we use the last day of the month, June 30th. And we call it balance carry down. Okay, and so the following, we bring it down to the opposite side down here, 3,620. And it will be on 1st July. And then we call it a balance brought down. So that is what we do when it comes to balancing accounts. Then we come to the next account. Comparing the two sides, the debit side is bigger than the credit side, and it's 6,000. So I put the same 6,000 here. And I find the difference between, this is 1,005, the difference between them is 4,500. And I choose the last day of the month, balance carried down is 4,500. And then I bring it to the opposite side. July 1st, balance brought down will be 4,500. Alright. When I come to Tunde's account, both the debit and the credit side are equal. So there will be no balance carried down because there is no difference. So we call it, the total is the same, 1,005, no balance carried down. It has already balanced off by itself. Then we come to purchases account. Purchases account, there is no figure on the credit side. So we have 2,500 as total. So we put the same here, and the difference is still 2,005. On June 30th, I'll call it balance carried down. Then I bring it to the other side. July 1st, it will be balance brought down of 2,500. When I come to sales account, on June 30th, there will be a balance carried down of 800. Then I close off the account. And then July 1st, there will be a balance brought down of 800. Rent account, on June 30th, there will be a balance carried down of 500. Then I close it off. Then I transfer to the opposite on the following day, following month. Balance brought down of 500. I'll do the same for purchases. June 30th, a purchase return, 300 as our balance carried down. And then July 1st, our balance brought down is 300. Then drawings is only one entry, so we call it balance carried down on the opposite side, 100. Then you close it off, come to the opposite, July 1, balance brought down of 100. Then finally we come to the discount received account. On June 30th, there is a balance carried down of 120. The discount received account is also balanced, and I bring the balance down. July 1, balance brought down 120. And then after this, I will extract the trial balance. Now look at the way I will do it. I will extract the trial balance. I will see trial balance as at 30th June. And the year, whatever year it is, will continue. I didn't choose any year for this particular work. Then there will be a side for debit and a side for credit. So this will receive the debit and this will be for credit. The currency sign should be shown, and here for the account title or particulars. Alright, so the account title will be here, and when an account has a debit balance, it appears on the debit side of the trial balance. If any of the accounts has a credit balance, it will appear on the credit. If any of the accounts did not have a balance carried down or a balance brought down, it will not come anywhere in the trial balance. Then also, we are going to pick the balance brought downs for the trial balance, not the balance carried downs. So take note, because you always see that wherever the balance carried down is, the balance brought down is at the opposite side. And so we are picking the brought downs and we are bringing it at the side where the brought down is. So looking at the first account, it is capital account. And when we take the capital, the balance brought down appeared on the credit side. So we bring it to the credit side and the value is 10,000. So that is what we bring. Then we come to the cash account. When we come to the cash account, the balance brought down appeared on the debit side, and the amount of the balance brought down is 3,620. So we put it there. Then the next account is bank account. And with the bank, the balance brought down is on the debit side, 4,500. Then we come to Tunde. No, Tunde is not coming because there is no balance carried down for Tunde. And then we go to purchases. So purchases account. The balance brought down is 2,500 also on the debit side. Then sales. Sales has a credit balance 800 on the credit side. Then we come to rent. Rent has a debit balance on the, so it's 500. And then we look at the purchases returns, which also has a credit balance. And the amount is 300. Then we look at drawings. Drawings has a debit balance of 100. And then finally, we look at the discount received, which also has a credit balance of 120. So this is what we call a trial balance. At the end of the day, we should sum the two sides up. We should sum up the debit and the credit, and it is expected to be the same. It should balance. So the debit side should be the same value as the credit side. So starting from the credit side, 10 plus 8 gives us 10,800, plus 300 gives us 11,100, plus 120 gives us 11,220. So the credit side gives us 11,220. Now looking at the debit gives us, looking at this is 8,120. Adding this, you have 8,120 plus 2,500. You have 10,620 plus 500. You have 11,120 plus 100. That is 11,220. So we could see that both the debit side and the credit side has balanced, and this is what we call a trial balance. So ladies and gentlemen, after making your entries in the ledger account and you balance of the account, you extract a trial balance. Your trial balance must always agree. If your trial balance does not balance, it means that there is a mistake with the entries you made. Thank you very much.